I think I have previously said a number of times that I didn't think zero interest rates were good for business. That zero interest rates effectively, or very low interest rates, took away the sense of urgency and the sense of the need to accomplish things. And so consequently, I think that long 8-year period of very low growth was assisted by the fact that interest rates were so low that there was no penalty if you didn't wait until you to do it tomorrow.
But should interest rates be based on that psychological effect, or should they be based on inflation globally? Shouldn't it be marked? They should be where they are based on inflation.
But I think you got to look at it another way.
Yeah.
Interest rates have a cost of money. If the cost of money is free, the discipline is not there. If the cost of money is expensive, the discipline is there. I have advocated and said over and over again that when there is no cost of capital, just as there's no cost to doing other things, discipline goes by the wayside. And so I think rising interest rates is healthy for the U.S. economy. Now, each extreme has its own limitations. For, 25 years, the risk-free rate was something like 5.6%. Today, the risk-free rate is 2 and something. Based on the amount of debt we have outstanding, I don't think this country could afford 5.6%. So I think there's an artificial cap on interest rates. But between, give or take, probably here and 4.5, I think maybe a rise in those costs of capital is more positive than negative.
Even though we may feel it in the stock market if we go there.
Well, I keep reminding everybody that the stock market is interesting, but the reality is, what's the GDP? What's the growth? What's the demand? What's really happening? The stock market is theoretically supposed to reflect futures. Stock market has a habit of being both right and wrong. But I think what's going on the ground is a much better harbinger of the future than almost anything else.
What is going on the ground?
Well, I think things on the ground are less than 100% stable, but actually, I think doing pretty well. For a long time, we talked about how the U.S. economy was impacted by the lack of confidence, and that people, were reticent to make significant future commitments when they were as uncertain as to what government policy would be going forward. I think there's a lot more clarity in public policy. I think there's a lot more clarity in regulation. And I think that clarity translates into a higher level of confidence. So I think the economy is doing pretty well.